Most people believe 2025 was a great year for SoFi Technologies and that its best days are already behind it, pointing to slowing growth, analyst downgrades, insider selling, and recent share dilution as proof that SoFi has peaked. But the real question is whether these are genuine warning signs or simply bearish narratives being recycled again. In this video, I'm breaking down the main arguments against SoFi one by one and asking the question investors actually care about. Is SoFi stock a buy or a sell heading into 2026? I've been tracking SoFi for years, including when it was trading near $6, and it remains one of the most discussed companies on this channel. So if you follow SoFi closely, let me know your thoughts in the comments. Before we go further, a quick disclaimer. I'm not a financial advisor, this is not financial advice, and this video is for educational and entertainment purposes only. Always do your own research. Now, let's get into it. One important update that hasn't received much attention is that SoFi's expansion is quietly accelerating, with the company adding hundreds of jobs, including a major hiring push in North Carolina supported by long-term local incentives, while simultaneously rolling out new products such as payment solutions and digital initiatives and preparing infrastructure for future scale. If you look at SoFi's careers page, it's clear this is not a company acting like growth is slowing, and while that alone doesn't make the stock a buy, it does challenge the idea that operations are stalling. On the bearish side, critics point to share dilution, but the recent dilution was relatively small, under 5%, and those shares were issued at prices higher than where the stock trades today, strengthening the balance sheet rather than signaling distress. Insider selling is another popular concern, yet most recent insider transactions were tied to tax obligations from stock-based compensation, which is normal, and the majority of executives still hold substantial stakes in the company. Interpreting these sales as a lack of confidence without context is misleading. Analysts have also lowered earnings expectations for the coming years, citing slower platform growth and rising expenses, but historically, SoFi has consistently beaten Wall Street estimates, delivering revenue and earnings surprises quarter after quarter, even during periods when sentiment toward fintech was extremely negative, suggesting that downward revisions often set the stage for future beats rather than reflecting business weakness. Institutional ownership further tells a different story, with overall institutional participation rising steadily and recently reaching its highest level ever, indicating that long-term investors remain confident despite short-term volatility. Looking ahead, 2026 could matter more than 2025, as SoFi continues growing its member base at a rapid pace while successfully cross-selling more products per user, driving deeper customer relationships rather than just headline growth. Adjusted revenue and profitability metrics are trending toward new highs, and upcoming full-year results may further clarify whether SoFi is transitioning from a growth story into a durable, profitable fintech platform, which will ultimately determine valuation far more than short-term noise. So, is SoFi stock a buy or a sell heading into 2026? The risks are real, competition is intense, macro conditions matter, and execution must remain strong. But the idea that SoFi has peaked doesn't hold up when you look at hiring momentum, product expansion, institutional ownership, and long-term financial trends. Whether you're bullish or cautious, one thing is clear: SoFi is far from a dead story. And if you'd like to see a full earnings preview or a deeper breakdown ahead of the next results, let me know in the comments. Thanks for watching, and remember, this is not financial advice, just independent analysis.